Thanks, everyone. Excited to be here. Perhaps we could kick it off with some introductions, guys. Yat, do you want to start?
Sure. My name is Yat. I'm chairman and co-founder of Animoca Brands. We're a company that's probably most known for having made many investments, particularly in Web3 gaming. But we're also an operator, like the owners of the Sandbox, Mochaverse, and a bunch of other sort of Web3 gaming titles. And we've done over 450 investments in the last 5 or 6 years.
Yeah. Hey everyone, I'm Michael Wagner, co-founder and CEO of Automata. That's the studio behind the game Star Atlas. Long-time builders in the space. We got our launch and debut back in early 2021. We're building a grand strategy, space exploration, massively multiplayer online game. Really targeting hyperscale with this as well through massive numbers of user concurrency. General idea is you can get out there, explore space, own all of your ships, participate in a new digital economy, and yeah, excited to have the conversation today.
Robbie, co-founder at Immutable. We're the leading Web3 gaming platform with over 300 well-funded games building on us. We have a sort of full-stack platform to build on, and the imminent launch of Immutable ZK EVM, a ZK-powered blockchain. And we've been building this space since 2017, where we launched the first ever multiplayer on-chain game.
Awesome. Thank you, guys. I wanted to kick off kind of reflecting a little on where we're at this past cycle. I mean, obviously it was the first time crypto gaming as a concept sort of really reared its head, and all of our panelists here today were a big part of driving that first sort of venture into the mainstream, if you like. As I say, exciting time, lots of games launching this year, but yeah, wanted to spend some time just reflecting on what maybe some of the key learnings from last cycle were from that first sort of attempt at building some of these games. So yeah, maybe you could kick us off, given you have very broad exposure over across the space with all of your investments these days.
Well, that's a long list, so I'll try to keep it short. But I mean, first of all, I think all of us are generally much happier in the last 3 months than we were most of 23. I think that's a fair thing to say. One of the things that we're seeing right now is that there's still very much an acceleration in a little bit more as the sort of casual games as opposed to sort of the mid to hardcore type of gaming styles for the time being. And I think of this a little bit as kind of like the Candy Crush era of Web3 gaming, meaning that when Axie Infinity first came out, kind of like Angry Birds, then essentially we're kind of advancing that a little bit into sort of the more casual, but still more better mechanics and better knowledge around basically how the systems work. It's kind of Candy Crushy like era, and of course we'll advance to sort of, I guess, the sort of AAA sort of type of gaming that we'll see with Star Atlas and so on as well very shortly. But I think what we've seen also is that with the launch of many gaming tokens, like in our portfolio, like in some of the joint portfolios, like Pixels, for instance, what they've done is that when they moved over to Ronin, they basically kicked off these network effects. But what was interesting is that because Ronin had this big number of Axie Infinity users that were basically looking for new content, it actually sort of created this flywheel where the Pixel users were able to leverage the Axie users, basically powering Ronin, right? And then what then happened was that it brought in new users that basically brought new users back into Axie. And so both Pixels, which is now I think the largest on-chain game for the time being, I think about 700,000 users for the moment, and then Axie Infinity basically saw an increase in that as well. So we're seeing these network effects starting to come into play. And of course, we see also a lot of excitement in the space. I think one of the things that the learnings from 21, 22 versus where we're today is that before it was much more speculative in nature, more financial. I guess that more people were in it for financial reasons. And while the utility is increasing, I think one of the key learnings we had is that there's still a gaming experience for those who hold the assets but are not gamers themselves, right? So I think in the past, a lot of our portfolio and ourselves included, we're thinking about how do we bring a Web2 gamer into Web3. So that was one narrative as an active gamer. And how do we bring a Web3 holder to become a gamer? And what we're finding is that actually there may be a different type of gamer altogether, meaning that if you hold an NFTs, or if you hold a token, you're still in the game, but you're not necessarily a person who's playing the same way as the active gamer, right? There's almost like a division between a labor class, which is the gamer, and the capital class, which is basically maybe the holder, but he's still part of the game. And I liken this a little bit to the sort of, when we went to mobile gaming, for those of you who might remember, in mobile gaming, actually, all the hardcore gamers back in the console days did not want to play mobile games, right? They were shitting all over mobile games, saying this is not a good experience whatsoever. But what it actually did was it brought in a lot of casual gamers that never played games before. That's how gaming went from 400 million gamers to literally 3 billion today, right? And so one of our new theses is that, well, there's 3 billion people playing games, but there's almost 3 billion people who are not playing games that are online today and growing. And that could be that more casual, that even more passive than a person who's just playing casual games. Because a portion of them then translate, but not all of them, right? So that's kind of one of the thesis changes on our side that we found. And so integrating the NFT and token holders that are more passive in their activity, but still being part of the game is one of our, let's say, new findings.
Mm-hmm. Yeah, it's super interesting, the emergence of a new player archetype that's participating around these games in the economy. I mean, obviously excited to see more experimentation on that front and where that can happen that's not detrimental to any other player experience and where things don't get too heavily financialized and driven. But
well, I mean, I think one of the things that, just to cover on that topic, one of the things that we see also is that the adoption from mobile gaming wasn't actually moving gamers into mobile, right? It was basically making games even more easier to play, right? So it was the mass amortization of gaming, because the gaming before mobile was actually complex. You need to have a controller, you need a joystick, you need all these things, or use a keyboard, WASD. Like, these were actually not easy for casual gamers to play. So my mom wouldn't be able to play those games. But then when casual gaming came with mobile, it wasn't the fact that it was portable, which is what the Game Boy did earlier. It was the fact that through a swipe of a finger, you could be almost as good as some other gamer. And that's what brought in the billion. So it sort of mass amortized gameplay. And so, what's the next level of that? And the financial aspect is an involvement, meaning that you have a stake in the game. So you are actually interested in it. You are emotionally attached and involved in it. But that doesn't mean that you are playing it just for the money, right? It's kind of like, when you play poker with your friends in your home. It's not about how much money you win. It's the fact that there was a stake and that was fun, and you might have won $10 having played for 5 hours, and that was good enough.
Interesting. And then, Michael, I wanted to kick it over to you. You guys, unfortunately had exposure quite materially on the sort of FTX front. I think you guys have shown massive resilience in sort of persevering with that, and seems like you guys are, in a great place now. Would love to hear some of your sort of key reflections on that whole experience and how you're thinking about things, how you're thinking about carrying those learnings forward.
Yes, the number one lesson is don't keep a lot of your treasury on FTX, right? But no, I actually would like to pull a little bit on a string that from a comment that you made yet, and that's around really user segmentation. And you were talking about the financial incentives and motivation for players to engage in these games. And I think what's really unique and powerful about Web3, about blockchain, about crypto integration is the simple fact that we're able to provide additional benefits beyond just the gaming experience. And there was a really big narrative over the last 2 years through the bear market of, hey, just build a great game, right? And I think that is a critical objective for you to have as a studio and as a developer. Ultimately, that is going to be your retention mechanism. It needs to be an entertainment experience that sucks people into it and keeps them immersed into that gaming environment. But the reason we're doing what we're doing is because, and building with the technology that we are, is that it can get so much bigger than that. And in terms of lessons learned, I think one of the big things for us to take away, and one of the areas that we focused on heavily on, is on sustainable economic architecture. So coming up with more complex and more sophisticated economic systems in your game that are not driven exclusively through hyperinflationary token emission. We've seen that model fail over and over, and while that is in fact a great tool or mechanism that you can use to attract gamers to your, or rather users to your platform, it's not necessarily the sticking point for those users once they're there. They might not be there for the game at all. In fact, it's arguable that they are only there to maximize the amount of value that they can extract from that system, and then they will leave as soon as that incentive goes away. And so, at least for us at Star Atlas, our model is driven really more by a peer-to-peer producer and consumer-based economy. So I think the token emissions, that's a great tool that people can leverage as a bootstrapping mechanism to kick an economy off. But what's really necessary is creating deep layers of complexity and the ability for players to specialize in various aspects of your game and create markets for themselves. So being able to establish a niche within the game that they specialize in and then leverage that to produce either value or convenience for another player. So that's the key thing. I think key takeaway for a lot of people that are building now is, that system of simply hyperinflating your economy is not going to be sustainable. It never will be sustainable. It might help you raise capital because your numbers look good, but I would think from the investor perspective and standpoint, you're probably looking deeply into the team's mechanisms for attracting these users in the first place. And if you identify that there's not going to be a long-term path with the users that we've attracted, then it becomes less of an attractive investment. But secondary to that, I think what we're seeing right now too is the proliferation of higher quality, higher caliber games. The AAA games, these are products that take years or a decade plus to produce. And so, the earliest stages of Web3 gaming probably kicked off with CryptoKitties in 2017, maybe a little bit earlier than that. And especially back at that time, there was no discussion or innovation around bringing a mainstream title, or what otherwise would be a mainstream title, to the blockchain. And so now that we have a few years under the belt, we're starting to see these products come online. Again, Star Atlas, we've been able to build for the last 3 years. And what's really challenging from the perspective of building this type of game is that we are out there generating revenue, we're raising money through the sale of assets, and so there's an immediate demand that we need to satisfy with respect to player engagement. We need to deliver something iteratively so that they can actually enjoy the product that they're putting their capital into. So I think it is exciting though right now, not only for us, but a lot of the other big titles that are coming out, and this is a rising tide lifts all boats scenario. I think one big winner in the space is going to contribute to everyone doing exceptionally well, and it's going to start bringing that mainstream audience, the non-crypto native user, into the space.
And Robbie, you guys have done a fantastic job of growing market share. Immutable's become a household name in crypto gaming now. What's your view on this? I mean, obviously you have a massive sort of portfolio of games that are building with you guys. A lot of those are sort of yet to launch, but it's happening in the not too distant future. What are some of the key insights that you guys have gleaned last cycle and that you're advising these teams with?
Yeah, there's a few observations. I think the first thing is everyone is still massively underestimating how big Web3 gaming is going to be. I mean, probably not the people on this panel. I think people here have been evangelizing it since it basically existed as a category. But when you think about gaming goods, they're essentially the largest digital good category that exists. There's $240 billion spent on video games every year. 150 of that are digital assets. And when players spend that value, they get a line in a database they can never sell. Overnight, when players have the option to sell that, you have brand new monetization mechanisms, secondary marketplaces, royalties, but you also will take the TAM of gaming from $150 billion to trillions of dollars, because any market with sufficient primary spot liquidity has secondary financial markets that are an order of magnitude larger than it. And gaming is now subsuming everything. It is bigger than music, movies, and TV combined, and it's compounding at 10% year on year. I think the main thing that's stopped it up until now has been two things. Infrastructure has not been ready to onboard everyday customers. If you ask someone to sign up, write down 24 seed words, you are losing 99.99% of your customers. Finally, we're having wallet infrastructure where you can, with, for example, Immutable Passport, sign on with email. Already in the last week, we had 2 games launch, and we had 100,000 unique sign up in 4 days. So we're seeing the first trickles of this flood start to come through. But the second thing is just gaming timelines. In previous bull runs, the financing bull run has been very quickly followed by a shipping bull run. Andre Cronje can ship something in production in 3 weeks from financing to landing it. Games take time. They take anywhere between 2 to 5 years, and they're much more like building a movie than building a piece of software that you can ship overnight. 2024, from our estimate, you'll have nearly 40% of these games being launched. There's been nearly $20 billion invested into games and gaming platforms in the last 4 years. This is far more than mobile gaming had in its nascent years. It's far more than free-to-play or the shift to social gaming. You could throw this much money at a toaster and it would find product market fit. So there are going to be hits. It's going to be entirely power law driven, and you'll have the biggest game having more customers than the rest combined. But I also think you'll have a much higher survival threshold than normal gaming, because you're going to have communities that can survive on only 1 million players, 5 million players of incredibly high spend and tokens providing fundraising support for the entire operation. So I think this is the calm before the storm. I think even in the next 8 to 12 weeks, we have some of the biggest games in the world launching. I mean, Pixelmon, Treeverse, Illuvium, Metalcore, Guild of Guardians, Blast Royale, which has 5 million installs. I'm feeling personally extremely excited, and I totally agree with what you said, which is it's just that one hit that's going to be the inflection point. And you can argue there's been sort of hits of different stages so far. There's nothing at the stage that will truly be a proof point that Web2 games suddenly overnight have conviction. We've got to build with this model, and this is exactly how you build it from an economic perspective. So look, I'm feeling very, very quietly confident. I think it's going to be a huge year.
Absolutely. I mean, yeah, obviously, you sort of reflected on there. It takes time to build these things, right? Realistically, all of that funding boom kicked off in 21, 22. We're now 2-3 years on from all of that, and the time has come, the cold light of day. I think the next 12, 18 months, there's going to be a lot of exciting project launches. Yeah, would love to kick it over to you and get your perspective on how you're advising some of your portfolios to navigate this space. Like it or not, crypto does have very financial sort of undertones to it. You know, a lot of these projects are launching, you know, obviously things on chain, oftentimes launching tokens. I mean, we do have 100+ games all trying to do this year. You know, there's going to be a lot of sort of new tokens hitting the market. One might suggest that that's going to be, you know, quite dilutive, and that there's going to be a lot of competition for, you know, what for now remains a relatively scarce pool of attention in the grand scheme of where we all agree this is going. So yeah, I want to talk about the next 12, 18 months and how you're advising people to navigate that.
Right. I mean, so first, and related to that advice, I guess just to pull a little bit on some strings that were just discussed here, I think, is that when you're building an economic system, what's always needed is also an investor base. But in the classic Web2 model, the investor base was a VC. But actually in Web3, the investor is your community as well, right? And I think that's something that is often underestimated by the kind of companies that do Web 2.5. And I don't mean that in a negative sense, because I always sort of comment around, well, which side of the Web 2.5 are you on? Are you Web 2.4 or are you Web 2.6, right? In the sense that are you more Web 3 native versus are you more Web 2 native? And so what we found and what we're advising companies is that if you're trying to be too Web 2 native, you may as well just be a Web 2 game. Yep. Because you're basically competing completely against, it's kind of like the superpower of Web 3 is the financial aspect. I mean, the blockchain is a fintech revolution, and by basically putting gaming on top of really a finance layer, you're creating all these type of network effects in the financial system that no other gaming system had before. And that you have to take advantage of that. If you don't take advantage of that, you may as well just make a Web 2 game. And I think traditionally, a lot of Web 2 game designers struggle with that. They treat the market volatility, for instance, and the fluctuations as a bug, because they like things stable and controlled, right? They're more like dictators in their games, right? Whereas actually Web3, it's an open market. You have to actually flow with the market, and you have to sort of work with the dynamics of that type of open market. And so the dynamic as we see it as well is that you need to bring a strong base of Web3 players into your community, at least in this era, because the Web3 user, the true Web3 user, is somewhat financially literate. So by that we don't mean that he's a Warren Buffett investor, but he does think of everything that he does when he buys NFTs, when he involves in tokens, from the lens of an investing lens, right? And they create the staying power. Like an economy, if you have an economy with no investors, then you don't have someone who's investing in the long term. Then you basically only have a labor class. And the labor class, the only thing they do is extract, which is okay. They provide value to the network. But then these tokens, when they're issued, if they only go to people who simply just do it to make money, from a labor standpoint, the only thing they will do is sell, right? And that has a lot to do with the fact that the state of the world is that the majority of the world is not financially literate anyway, right? Like, you know, everyone in this room has an investment portfolio and you get it. But the majority of, you know, maybe even friends and contacts you have, which is like over 90% of the world, does not have an investment portfolio, does not understand that, right? And so that's the bridging. So the Web3 dynamic has to be grown from. And so with Mochaverse, what we've done is we've created basically a way in which Web3 users have an ID and basically a system where we can direct Web3 users that are Web3 native into these various gaming systems, like we did with Pixels and Nine Chronicles and other games, that basically bring that nativity, and then they don't just spend more, but they also think of it in the long term, right? So I think that's a real important thing. We're at an era where, in Web3 gaming, you have really multiple network effects, but the most powerful one is the financial network effect that's represented through the token, and of course the utility. And these network effects combined basically is what a Web3 game makes possible. And the token itself, we also think of, just your question on dilution, represents the network effect of the ecosystem you're putting together, right? So this, again, we've never had a time before where you could really sort of participate in the network effects as a whole. You could really just participate maybe in the equity of something. But the equity is really a subset of it. It doesn't partake in the network, right? You don't buy into an Ethereum token because of the profit you get from Ethereum that it generates. You buy the tokens because you want to be a member of the network and partake in the network effects of it. And so just like with games, there's going to be thousands and thousands and thousands of tokens launched, and not all of them will succeed. But we do think that they're going to have a higher success than the gaming launches because financial effects make it more sustainable. Right? So in other words, today, you can have a game with 100,000 active users on a Web3 game. It might not be $1 billion game, but it will be much more sustainable than putting a game that size on basically the App Store, right? So we see that effect basically happening as well. So, but you need the Web3 user. If you don't have the Web3 user in this era, because the narrative is still very financial driven, then I think you won't succeed in the near term. Of course, when we get to a point where it's more balanced, right, then I think it's a different story. But for the next 12 to 18 months, you have to embrace the Web3 community much more directly and build community around that.
Absolutely. I think I agree on a ton of those points. I think obviously the sort of evangelical forces that unlock by giving communities like financial upside in these things, I think all of these things are an insane growth wheel. I guess the part that I'm sort of mindful of is just, I, again, completely agree on the importance of having that Web3 community at the heart of it. I mean, we try and invest in companies that are taking some kind of existential bet on the crypto loop, right? But that's what we think is exciting about this space. But, we've acknowledged that, obviously the sort of like player base, the actual audience of this stuff is going to grow, and that there's a ton of token launches this year. I just want to be mindful of this like low float, high FTV meta, because it's all fine, for now. But when the market turns, which it always does, I think that a lot of the new players that have been drawn in who don't have experience with the financial side, are, basically set up for sort of disenchantment when they inevitably have to learn that lesson like everyone else did.
Yeah, and I think the challenge is that if you, as mentioned earlier, you're building economic systems. So if you don't have much familiarity with economics, actually it's really difficult for you to launch a Web3 game. So that's, I think, one of the main lessons here as well, which is that you need to understand, or at least have a base of economics. And whatever theory you want to apply, whatever system you want to apply, that attracts that kind of base, that base as well, right? But I think the other thing also, just on that note, is that when you think about sort of these token launches, right now, airdrop mechanisms should not simply be viewed as purely dilutive. They can be dilutive, of course, but they're also meant to be inclusive for the community because they're helping you build the ecosystem. Like when you think about NFTs that are sort of dropping at, given to the community, so to speak. The key isn't that you give it for free. The key is who you give it to, right? So in other words, if you're rewarding the player base you want to bring in, and you are able to direct the player base you want, then giving them reward makes them come back to you in a much more loyal way. Right? We spend money on advertising. In the gaming industry, spends $100 billion a year spending money on advertising to bring in players, right? Whereas if you do an airdrop to those players, the incentive is strong, but actually you're spending the same kind of money, actually more efficiently, to the player itself, right? Apple, Google, and Facebook receive all that money. How much of that money that they receive goes back into the gaming ecosystem? Scarcely any of it, right? Whereas if you give it as an airdrop to community holders, the chances of them putting that money back into your game is significantly higher. But the key is, are you able to get it to the player that you want, right? And the 21-22 meta basically was just airdrops for everyone, and everyone was there basically just to extract. And then you had these problems. But for instance, with Mochaverse, we were very particular about who we would give these NFTs to. And it was literally close to $0 mint, right? And today the floor price is 4 ETH, partially because the people who we gave it to were the ones who were intended to building it, right? And so it's like no different than when you targeted advertising, it's targeted airdrop, right? And in the last 3 years, not just in gaming, $21.7 billion of value was dropped to users through airdrops, which, when you think about that, is a massive incentive but also is unheard of, right? So the players really create these incredible potential opportunities, and then they stay in these communities because they've been rewarded and they become loyal in a different way than simply in Web 2. Really, game loyalty is just based on sort of the time you spend after that and the social graph.
Michael, I do want to jump onto you, but I thought I'd kick it over to Robbie as well, given you have this big ecosystem, similarly a ton of games out there. Yeah, what's your view on some of these topics we just discussed?
The opportunities for Web3 games?
Well, yeah, I mean, this whole notion of lots of launches, lots of tokens, the potential dilution effects longer term. How you guys view that? Because obviously there's a ton of positives, and yeah, would love to get your thoughts.
The market always goes through phases. The things that we focus on at Immutable is, number one, the games we work with have to be fundamental quality games that you would want to play outside of Web3. And I think that's a really important bar. I think Web3 can add a ton of value, it can add a ton of monetization, but unless you would play that game, if it were just a normal Web2 game, it's going to be insufficiently high retention to be successful in the long run. And that's why every one of our, I think it's now 330, I think we've sort of been exponentially growing over the last 3 months, games building on the platform. We literally play test, we make sure they have the funding roadmap to be successful, and we make sure these are going to be high quality games. But the second opportunity I see is tokens. I agree with a lot of your comments, Yad, and my vision of tokens in the long run is they can replace performance marketing spend. The real winners in gaming, as it grows, is Google and Facebook, as games are continued to force to have to spend billions of dollars on ads every single year. And performance marketing for games has become completely red ocean. You literally have games now in China which are exact carbon clones of Clash Royale or another popular game, and they market themselves by having better performance marketing optimizations and cheaper in-app transactions than their competitor. The equilibrium for this is not a thriving industry where people can innovate. It's an industry dominated by who is the best at getting players to click through. Everyone's experienced those ads where you see a bait and switch of some fun-looking game and it ends up being some crappy thing at the end of the funnel. That's how important this is in the space. Now we have a model where you can effectively take a proxy for the future value to the game. You can give it to people for free for signing up to the game, and you can share it as they share it with their friends. And we're incredibly bullish on this model of using tokens as user acquisition in a profitable and ROAS-driven way. And I think that's really the key thing. People need to view tokens not as free inflationary supply that can be given out to do hype. A lot of the projects optimizing for that are probably shorter term tactical projects, but as a real opportunity cost, they need to evaluate the return on token spend. And people like Animoca do a lot of efforts internally to build up systems where they can help advise those games on that. So I think these are all parts of the industry which don't exist in Web 2, but which are now being built out and standardized into playbooks. And when those standardized playbooks become easy to use for anyone in Web 2 to develop, I think that's when you can have a game overnight become incredibly successful in Web 3. So I'm very bullish on tokens as UA and capital financing. I'm extremely bullish on royalties-driven models, because finally we can have a business model where the incentives of the creator are aligned with the incentives of the end player. And at the end of the day, that's what it comes down to. Right now we have a model where Magic the Gathering has roughly $20 billion of cards out there in the world, physical cards. But every year, they can't monetize any of the secondary trading of these physical cards. So they're forced to issue $30, $50 million of new cards, make all the less cards less valuable by making these more powerful, known as power creep, and try and monetize. It would be a much simpler business model if they could just take 2% of every transaction in perpetuity, no matter where they trade. And that model is now available to people in Web 3. And as soon as Apple realizes this, as soon as games realize this, it's a business model where their job is to grow the ecosystem, the GMV, and the user base over time, not how can I continuously extract more value at the expense of anyone else in a negative or zero-sum way. So that's what really got me into the industry in the first reason. And I think we're now seeing that emerge.
Absolutely. Michael, anything you wanted to add? Otherwise, I'll kick it over to our next sort of topic.
I have maybe just a few quick comments, and I think this really does come back down to that earlier topic we were discussing of user segmentation. And so you have the gamer audience, the traditional gamer audience. That's obviously who you're targeting longer term. But when somebody is launching a token, you're targeting directly the trader or speculator mentality. Now, these are people that are probably trading your tokens because they're looking for some type of profit or return. However, that also captures their interest, and perhaps then they become users of your platform or purchasers of NFTs or any other assets that you're selling across the game. Now, I don't particularly feel any concern, so to speak, from seeing a lot of additional tokens being launched. I guess from our perspective as a builder, it could be argued that every time somebody launches a token, that kind of dilutes the interest or potential user base of Star Atlas, because now there's a different option for them to select. But through the history of crypto and all of the cycles that have naturally occurred through Bitcoin, what we've seen with the rise and fall of the price of Bitcoin is that every subsequent cycle, there's larger numbers of users that are still around. Now, a lot of people will give up or quit if their portfolio gets wiped out. They leave the ecosystem, but we get new people every time as well. And I think with these token launches, we'll see a similar effect where new people are coming into the space because perhaps they identified or saw or were marketed to via one of these other projects. And again, that becomes an opportunity for us to go after that user base as a result of their interest in Web3 in general. Now, what's really powerful, and yet you made a comment that I just wanted to touch on quickly, though, which is that there are a number of new monetization strategies that arise because of Web3, and the financial incentive structure is a great way to directly market to a user without even going through the traditional advertising platforms that are out there. But what's really incredible, and this can't be overstated, is in spite of that facet, and the amount of money that is actually coming into products or projects like ours, we're actually able to create a new paradigm of shared value exchange. So it's not just that we're capturing more money from our users. You had touched on community as being the investor into your product. Well, those same users that are investing capital for the first time ever are now able to realize value retained for themselves. Robbie, you made a very similar comment as well. And I think that not only do we end up having the highest lifetime value of all of our users with larger purchases, larger acquisitions, $100,000 or $1 million spaceships in our game, where would you ever see that executed in a traditional game? I don't think you would. I don't think it's possible because it's purely an expense. It's purely a single-sided flow of income or revenue from the user into the gaming platform. But as soon as you empower them to be able to recapture some of that value or produce value within the game, whether that's through playing, through trading, or in our case, again, with a lot of fully on-chain gaming mechanics and logic, we're enabling people to co-create and build alongside of us and create their own integration seamlessly into our platform. And now we've essentially recruited a global population of builders to build with us. And I think that it's completely transformative in the way that people will interact with games and understand the appeal of these types of products in the future.
I mean, just one comment I want to add on this one. One of our mottos of Animoca Brands is building in a shared network, right? And I think you just reminded me just about the effect of building in a shared network in Web3 is that all the networks kind of tie to each other because the liquidity is shared. Like in Web2, you can have a really big game. It's great that Fortnite has a lot of users. Nobody else cares, except Fortnite, because the users don't have a way of moving over from one area to the other. And while we don't have interoperability of assets yet, which by the way is why I think NFT liquidity, although it's still over $1 billion every month, is not as high yet, is because you don't have the same network effects building just yet, because you don't have that interoperability. But fungible tokens do have that interoperability, and especially when you think about how TVL is moving across all of these different chains, even though it's not related to gaming per se, the fact that that liquidity can move around, basically to Immutable or to Solana or whatever, fairly liquid and fluidly, means that gaming ecosystems or successes in those token ecosystems translate to other token ecosystems as well, because you can move money around, and which is the first network effect that we see in Web3 that is fluid. It's not the final network effect. It will be much bigger than that, but that's actually something that we have the ability to do today that we couldn't do earlier. So in that sense, I would sort of paraphrase a sort of famous Chinese idiom, which is I think you could have many, many tokens. So let 1,000 tokens bloom, and it's fine, because more tokens will bring in more users, will bring in more network effects, and therefore more liquidity.
Absolutely. No, really appreciate all of those insights. I think it's exciting to consider all this. I I do see those numbers of, in terms of launches this year relative to FTVs. I think there's already 100 bill of unlocks coming over the next 10 months. I mean, I know they're not all gaming, or the next 18 months. I know they're not all gaming, but going to be super interesting to see how all these dynamics play out for sure. Being mindful of time, I wanted to hit on, for each of you guys, like, what is top of mind? What's the North Star this cycle? What's, thesis validation for you guys? What's top of mind? Perhaps, I don't know, you want to kick us off?
Sure. I mean, I guess just brief, top of mind to us is how we bring more people from Web 2 to Web 3 is basically improving their financial literacy. We think the key in order to bring much more Web 3 adoption is to actually make users more financially literate, which means we think gaming is a key storytelling medium to do that. If you think about all the skills that people have learned through gaming, knowing Pokemon cards or basically, understanding sort of rules in Magic, the Gathering or whichever, right? Those are storytelling tools. As humans, we exist as, on stories, right? And so gaming is that medium, we think, and so we can onboard, the masses onto Web3, in part not just to make it fun, but also by teaching them about financial systems. And if we can teach our children, algebra and math, we can certainly teach them financial systems and economics.
I love it. Michael?
I mean, it really just comes down to execution for us. It's, we've just spent a couple of years in the trenches, building through the bear market, getting little attention, of course, because one of the biggest segments of our audience is that crypto native user right now, not really going after the traditional gamer at this point, but we've made substantial progress in development. We have a couple of big releases coming up this year, so it's making sure that we nail those ones. It's making sure that as we execute, we can continue building and just maximize the opportunity that's available to us today in the current cycle. I think it's really critical that we're able to continue producing high revenues as we have. I mean, our product is probably a $400 million production budget in total. So we've made substantial progress towards that, nearly $250 million of revenue over 3 years. But we still have a ways to go, and yeah, now's the time.
Awesome. Robbie?
Look, last month we won 5 times more games than we did the previous year, and our win rate is, across the last 6 months, 83% when we compare to competing platforms. Really, the job for us now is 80 of these games are going live in the next 6 months. How do we make them as successful as possible? We've got, I think, over $50 million of rewards being pointed at the community in the next 3 months alone. We've got an enormous amount of games and tokens launching, and I think the wealth effect and the network effect from those are going to be phenomenal. So please, if you're a gamer in the audience, come reach out. We've got a ton of stuff behind the scenes that's really exciting.
Amazing. Well, to our esteemed panelists, thank you all. It's been a super fun conversation, and yeah, bring on the games. Exciting times.
Okay.
Thank you.